We have proven now over the course of the past few years that we can reimpose sanctions in a devastating way, and the Iranians understand that.
Even while we're making incredible progress, it remains a serious and deadly threat. And the data is clear.
If we were able to do it for COVID, why not for cancer? Why not for Alzheimer's? Why not for many other diseases?
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 21st of June. Happy summer solstice as well. I'm Francine Lacqua in London, and here's what's coming up on today's program. Investors sour on the reflation trade as a 30-year Treasury yield falls below 2%. How much flatter will the curve get? Nuclear talks hit a roadblock as Iran elects a new hardline president. Tehran wants a guarantee that the U.S. won't quit the accord again. And Germany and the U.S. warn against rising cases of the Delta variant of COVID-19. Joe Biden urges unvaccinated Americans to get a shot. So let's get straight to our top market story. And 30-year Treasury yields have fallen below 2% for the first time since February. Now, that's as traders unwind reflation trades in the wake of the Federal Reserve's hawkish pivot last week. In fact, the St. Louis Fed President James Bullard also added fuel to the debate on Friday, saying that inflation risks may necessitate a hike as soon as next year. I believe he speaks again today with Mr. Kaplan. So let's get the very latest on the markets with our Danny Berger. Danny, so nice to have you back in the office. What are you looking at in the market?
Yeah, I can't tell you how nice it is to be back and not be stuck quarantining in my tiny little flat. Well, what an exciting day to come back, Francine. Basically, as you were saying that we hit below 2%, guess what the 30-year yield does? It goes back up above 2%. So look, in the Asian session, we had some pretty strong buying of the long end of the curve and really throughout the curve, but that curve flattening, taking a bit of a breather. You can see that there are people still going in, buying 5-year yields, buying 10-year, but you have to go, like 6 decimal points back to actually see the move. But that doesn't mean that this trade is necessarily off. There definitely is this debate emerging of whether the Fed has now changed its reaction function. And if it has, if it's going to swat down inflation anytime it gets a whiff of it, why be scared of duration bets? And speaking of duration bets, I just want to show you quickly what's happening in the equity markets, because it went from this yield curve flattening to spilling out into other aspects of the market. So this is the close of the Japanese market. It ended down more than 3%, a very value-heavy index. So it makes sense that the underperformers in this context of long duration being back in vogue, to see Europe down, to see Japan down, both value-heavy indexes, and to see NASDAQ outperforming. Again, this is where you want to be if inflation is going to be controlled in the long term. But S&P 500 futures doing well. Okay, so it started as a very risk-off day. Now it's getting a little bit more nuanced, Francine.
Danny, thanks so much. Our Danny Berger there with the great inflation unwind. Well, joining us this morning is Philipp Hildebrand. He's vice chair at BlackRock for many years. Of course, he was also central bank governor. So, Philipp, you're one of the best when it comes to figuring out what central banks can and can't do in terms of communication, how the market interpret it. So thank you so much on a day like today, especially for being with us. Philipp, when you look at some of the things that, we should be looking at, which is the unwinding of the reflation trade, is this just buying time for investors to understand fundamentally what kind of economy we're left with?
Good morning, first of all, Francine. It's great to see you back in the office. I hope I can join you sometime soon. Well, I think you get to the point here. Markets are still trying to get used to, in a sense, and find their way around the new framework that the Federal Reserve has adopted now for some time. And I think that's what's going on here. If you look at the new inflation projections in the framework, basically, they will tell you that they're just about aligned with this idea of overshooting inflation for a couple of years in order to make up of past undershoots. So I think it's taken, unfortunately, some time for the market to really come around and, in a sense, embrace the new framework. And I think we're still testing the waters on that. My guess is this will settle down as we move forward and as the market understands that the Fed has a new framework, and that in fact the new inflation projections are very much aligned with this notion of overshooting to make up for past undershooting of inflation.
So if you look at this new framework that you eloquently actually lay out, what does it mean for the rest of the world? Does it change the way that we should frame and talk about the ECB and the Bank of England and the Bank of Japan?
Well, as you know, one of the great features of this crisis has been, in a sense, something we've called a policy revolution, which in many ways is a blurring of the boundaries between fiscal and monetary policy. So far, the Fed is the only central bank that has embraced a new framework. We're about to see in a couple of months the new one by the ECB. That'll be very important to see whether another major central bank joins this overshooting idea. My guess is that's what we're going to see. We're going to see a trend towards saying we have undershot inflation for many years. Now we're accepting some overshooting in order to make up for that over time. And then the question will become how much overshooting and for how long. And this is exactly where markets are, remain quite volatile around this question, as you can see in the last few days. So I think it's a kind of getting into testing the waters into a new framework, which one way or another will be embraced by other central banks as well in the world. But the Fed was definitely first in officially, formally changing its framework last fall.
What does, Philipp Hildebrand, a policy mistake from the Fed today actually look like?
Well, a policy mistake, I guess, would be if they don't manage to impose credibility of the framework. And you saw a little bit of a flavor of that. I don't want to read too much into the 24-hour kind of price or news cycle, but you saw a flavor of that. In other words, if they can convince the markets that they're serious about overshooting inflation for some time in order to align themselves with the new framework. And of course, in that context, the fact that inflation expectations have come back again so quickly after the meeting is not great news. But again, I wouldn't read too much into this. We're too focused on the day-by-day news cycle and price action. The key here is the current inflation forecast of the Federal Reserve basically implies is the minimum you would need in order to align yourself with this new principle, the core principle of the new framework, namely that this make-up strategy that you're going to have a couple of years of higher inflation in order to make up for past undershooting.
What does it mean so the markets at some point will settle, I guess, when they figure this out. What's the next catalyst for the markets?
I think just a little bit of time. I'm still struck by lots of discussions and, frankly, diverging views around what the Fed is really trying to do. And this, by the way, I think is also an important lesson for the ECB as they go into the final stage of this deliberation of the new framework, which I suppose will be announced sometime in September, to really be very clear as to what the new framework is. The framework the Fed has adopted is presumably by design fairly loose. We have felt it lacks some guardrails around precisely the timing of how long you intend to overshoot. And I think it's these uncertainties that then give rise to different market views, and that gives rise to price volatility. Again, I think, a couple more press conferences. Speeches are not always helpful because, of course, anybody on the FOMC can speak. And as we saw the other day, that can confuse the message. So I would focus on the official communication and see how they intend to implement, in a sense, live this new framework over time.
Philipp, is there anything that you worry about how we view the recovery? I mean, one thing that keeps on striking me almost day in, day out is actually the UK, one of the most vaccinated countries in the world. And then we talk about, the resurgent possible fourth wave of COVID-19. Is this something that actually, it's very difficult to forecast, so it's very difficult for economists to actually put into their forecasts. Is that where we could have a mismatch, or is there something else that you worry about?
I think the most important thing is this is not a recovery, it's a restart. And it's very important to keep that in mind. It's a completely different dynamic than what we would have had after the financial crisis or any other crisis where you have a kind of normal business cycle recovery. This is like a beach resort that opens on day one and the beaches are full. We're going to see huge GDP numbers, and the US demand is going to be enormous. Europe will lag not far behind. So I think we need to expect a lot of volatility around the data points because this is a restart, not a recovery. It's completely different. And we have, because it's so different and so sudden, we have a lot of bottlenecks in the supply chain. So take those two things together, we're going to have a lot of volatility. And I think the key is to look through that. What I'm worried about most, I suppose, is still COVID, right? I mean, this is all based on getting out of the pandemic. We have a clear path to get out of it, and that's through vaccination. I worry that 85% of all vaccines that have been administered have been done in the rich world. So that's clearly not only a moral, but also a major economic problem that the world faces. And then we just need to make sure that this vaccination strategy persists and can complete, so we can see continuation of this restart, and then ultimately growth will settle into whatever the new potential will be after the crisis. So I think the key risk factor to watch continues to be vaccinations, the vaccination strategy, the global aspect of that, and the pandemic generally. In other words, how we can ensure that we don't have something that kind of puts us back into COVID mode again.
Philipp, thanks so much. Philipp Hildebrand there from BlackRock stays with us, and we'll talk a lot more about coming back to work. Because coming up, getting back to the office, BlackRock says staff can start going back into work from next month, only if they're vaccinated. So more on the return to work next with Philipp Hildebrand. This is Bloomberg.
As more people get vaccinated, we keep bringing more back. We got a lot of work to get those back. But the view is after Labor Day, our view is all the vaccinated teammates will be back and will be able to operate fairly normally, and we'll then start to make provisions for the other teammates as we move through the fall.
Well, Bank of America is not the only big money manager putting conditions on its staff returning to the office. BlackRock announced on Friday that only fully vaccinated workers would be able to return to work starting in July. Now, all employees will be also expected to report their vaccination status by June the 30th. This comes as the U.S. hits a milestone of delivering 300 million vaccines. Now, even so, it's at risk of missing its vaccine target, getting 70% of all adults receive a single shot by July the 4th. The president urged unvaccinated Americans to get inoculated, warning about the highly transmissible Delta variant.
Even while we're making incredible progress, it remains a serious and deadly threat. And the data is clear. If you are unvaccinated, you're at risk of getting seriously ill or dying or spreading it.
Well, still with us is Philipp Hildebrand from BlackRock. Philipp Hildebrand, thank you so much for staying with us. I mean, there's quite a lot of debates going on in big corporations on how you get staff back to work, whether you fully open, whether you do distancing, whether it's flexible working. Like, you know, what are some of the discussions that you had to come to the conclusion that BlackRock has?
Well, first of all, I'd say safety, right, is always the paramount concern. You want to make sure that your employees are safe and feel safe. That's a very important piece of it. It's also true, and I believe this very strongly, that a great company is made up of two things: a great business model and a great culture. And it's very hard to persist on the culture front if you work remotely. We believe strongly that informally interacting, being together as a community is a very big part of the culture. And, we haven't seen our colleagues in a long, long time. I'm looking forward to seeing my colleagues in the executive committee for the first time later this summer. So the cultural piece is extremely important. And we want to make sure that everybody comes back together in a safe environment so that they can feel safe. So getting vaccinated is really something you do for yourself, of course, for your family, but you also do it as part of a culture, as part of a company, to help protect others, to help others feel safe. And that's very much the way we look at things.
And Philipp, how do you see, for example, executive travel or just like business travel? Because I hear both sides of the coin. People saying actually we'll go back to normal or close to normal in the next couple of years. And then people saying, 30% of my meetings I could do virtually, and now it's proven that it doesn't actually impact so much. So how do you see it changing, I guess, and developing as a legacy of COVID-19?
Probably a bit of both. I mean, we are human beings. I've been around long enough to know that humans are what they are. They like to move, they like to go places, and they like to socially interact. And that's a very important part of life, and we should embrace that. So I would certainly expect a lot of it to come back, particularly with regard to clients, new clients. There's nothing that makes up for the interpersonal exchange. On the other hand, will I go to Singapore or Hong Kong for one meeting and get on a plane and come back the next day, as I would have often done in the past? Probably not. So I think a hybrid version, particularly with people that you know well, right? I think that's the key difference. Communities, people, clients that you know very well, where you spend a lot of time in person, it makes perfect sense to continue some of the remote working.
When you look, Philipp, at some of the markets that worries you, and we were talking about volatility, do you worry about liquidity in the markets? I hear this kind of on the back burner from a lot of executives, and I wonder whether we're spending enough time talking about liquidity in the markets.
Well, I can tell you, just looking at our cash business, and I'm sure that's true for any of our competitors as well, it's extraordinary how much cash there is in the system from all sides, right? Retail, corporates, investors. So everybody has an enormous amount of cash, and it's not surprising. We have the highest fiscal stimulus ever in the history of economics, the lowest, most expansionary monetary policy ever, and the lowest real interest rate. So yes, there's a lot of liquidity out there. I think the real question will be longer term, can we kind of do this journey, get on this journey without losing the anchor of long-term inflation expectations? That's really the key piece. And of course, that takes us back to the Federal Reserve discussion or any other central bank discussion. We have to get inflation higher. You can make a good case for making up past undershooting, but the principal aim here has to be this entire exercise 5-6 years from now. We must not lose the anchor of inflation expectations. And that will determine everything else. So I think as long as we can get to that place, I'm not particularly worried about liquidity at the moment, but we should certainly watch it. There will be volatility around it as a result.
You always make us smarter on banks and how we should be thinking, especially about the banking sector in Europe. We know, of course, that the ECB will meet to decide whether they actually lift their cap on dividends next week. Is that important just for investor confidence that that cap is actually lifted now?
I'm not sure, to be honest. The good news is, partly because of what we've done after the financial crisis, banks have gone through this huge problem in the history of economics without any major problems. In fact, when I talk to CEOs right now, I notice that all of them are telling me that they're actually revising downward their provisioning month by month. And so things are turning out even better than they would have expected. And so we're coming out of this pandemic, in a sense, with robust balance sheets. And that's very important also with regard to your previous question on liquidity. We have a strong banking system coming out of one of the worst crises we've gone through. So that's very good news. Whether they lift this cap or not, frankly, the key is the responsibility of the banks themselves to do the right thing, particularly as we enter this environment of a huge restart, which we know won't last forever. This is not a recovery, it's a restart. And so I think much more important than what we do on the formal regulatory side is how banks behave themselves in terms of going through these next couple of months.
Philipp, thank you so much for joining us. Philipp Hildebrand there, the Vice Chair at BlackRock. Now we'll have plenty more, of course, on the markets throughout the day. Also coming up, talks to revive the Iranian nuclear deal drag on as Iran elects hardline cleric Ibrahim Raisi as president. And then a little bit later, we'll also talk about Bitcoin declining amid a significant fall in the hash rate. Now, what's the hash rate, you ask? All of that and much more later with our Eddie van der Walt. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The two main contenders for next year's French presidential race both fared worse than expected in the first round of the country's regional election. Marine Le Pen's national rally got 19%, almost 10 points behind her score in the last election, with President Emmanuel Macron's party taking 11%. Turnout, estimated at 32%, was at an all-time low. One recent survey showed many citizens didn't even know what the elections were for. Now, the US has rejected Venezuela's call for relief from sanctions, saying more needs to be done towards restoring democracy. President Nicolás Maduro reached out on the issue in an exclusive interview with Bloomberg.
I would say to President Joe Biden to stop from the White House, from the Department of State, the demonization of Venezuela, the demonization of the Bolivarian Revolution, the demonization of President Nicolás Maduro, and that hopefully we can find paths of reconciliation, of respect, paths of mutual benefit, and paths that allow us to normalize relations between the United States and Venezuela.
Investors sour on the reflation trade as a 30-year Treasury yield falls below 2%. How much flatter will the curve get? Nuclear talks hit a roadblock as Iran elects a new hardline president. Tehran wants a guarantee that the U.S. won't quit the accord again. And Germany and the U.S. warn against rising cases of the Delta variant of COVID-19. Joe Biden urges unvaccinated Americans to get a shot. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Monday, the 21st of June. So talks to revive the Iranian nuclear accord have ended without agreement. Diplomats adjourned a 6th round of meetings with major gaps remaining on the accord. Now, this comes one day after the hardline cleric Ibrahim Raisi was declared the winner of Iran's presidential election. Raisi's win could further complicate diplomatic efforts. Now, the U.S. National Security Advisor Jake Sullivan told Fox News that preventing Iran from obtaining nuclear weapons remains a priority.
Well, I think what we need to do in the United States is keep our eye on the ball. And that is our paramount priority right now, is to prevent Iran from getting a nuclear weapon. We believe that diplomacy is the best way to achieve that rather than military conflict. And so we're going to negotiate in a clear-eyed, firm way with the Iranians to see if we can arrive at an outcome that puts their nuclear program in a box.
Well, joining us now is our Iran reporter, Golnar Montavali, who I'm delighted is here in the studio with me. So, Golnar, thank you so much for joining us. I know you've been covering this right from the start. You've covered Iran also for decades. So what do we know about this new hardline president and actually what it means for the prospects of this nuclear deal?
Well, he's the head of the judiciary. He's an ultra-conservative. He comes from a very religious background. He's a hardliner. He is naturally very suspicious of engagement with the West, particularly the US. He is part of the hardline camp of Iranian politicians who are always very highly critical of America and don't want to see, frankly, softer relations between Iran and the US. So there's a huge question mark right now about what that means for Iran's broader foreign policy. But immediately, when it comes to the nuclear deal and the nuclear talks, there's a sense, I think, that they're going to be ring-fenced because the policy to continue those talks and to get the deal revived, particularly before June 24th. That's an important date, Francine, because that's when Iran's technical agreement with the UN nuclear inspectors expires, and there's talk of that being renewed so that there's more time for diplomats to get this deal back and running. But that policy to revive the nuclear deal, that's with Ayatollah Khamenei, the supreme leader, and the Supreme National Security Council in Tehran. And there are already signs from Raisi that he wants to preserve the accord. He said so during his campaign. He had a meeting with Foreign Minister Zarif today in Tehran. And there are all sorts of signs coming from Tehran that there is no intention there to kind of throw any spanners in the works in terms of Raisi's arrival in government as president.
So, I was reading up, and actually in 2019, the Trump administration also put sanctions on him personally.
Yeah.
So do those need to be removed for anything to happen?
Indeed, Francine. There's another question mark over that. So, as you said, in 2019, as part of the maximum pressure strategy, the Trump administration included Raisi, explicitly naming him in new OFAC designations. Those are sanctions effectively on Raisi. And Iran has said that the entire onset of new sanctions under the Trump administration, those need to go for the nuclear accord to be revived. So they want all the sanctions associated with Donald Trump, not just those that came as a result of the US quitting the JCPOA, but all of the sanctions that came afterwards as well need to go. And that includes designations on the new president-elect of Iran, Ebrahim Raisi. And I don't think that, there is a question mark now over whether the US will reconsider removing those sanctions or not, but we have to wait and see.
Does there need to be an intermediary between the US and Iran? Is there anyone that actually President Raisi is close to that could play that role?
That's another interesting question. We don't know what Raisi's foreign policy team is going to look like. The likelihood is that obviously they're going to be hardliners. They are probably not going to be people like Zarif, Mohammad Javad Zarif, who very famously has very eloquent English, who likes to use these kind of flawless sort of idioms and flourishes of diplomatic language. That's unusual in Iran. That is unusual for the Islamic Republic. And we may see a team that looks more similar to what we had under Mahmoud Ahmadinejad, who was the previous hardline president before Rouhani. We may see elements of his team return. We know that Saeed Jalili, the former nuclear negotiator under Ahmadinejad, who was also running in the presidential race and withdrew to throw his weight behind Raisi, will probably be rewarded with some kind of senior role, whether that's first vice president, we don't know. But there are big question marks over this. And I think that's why the nuclear deal issue is going to be ring-fenced for that reason, because Rouhani's team, if you remember, came at the same time as Barack Obama's team did in Washington. There was this kind of alignment of different factors in 2013 that allowed the kind of ecosystem to kind of build around the nuclear deal in the first place, which was then agreed in 2015. We don't have that this time. So I think Khamenei knows that he needs to ring-fence the talks and all the action around the nuclear deal in general.
Golnar, thank you so much. I could talk to Golnar for another 2 hours, so we'll get you back on. Golnar Montevalli, there, our Iran reporter. Now, smaller companies in Britain's FTSE All-Share Index are lagging behind their larger peers when it comes to having diverse representation on their boards. That's according to a report by Women on Boards UK. And my next guest says that previous reports looking at FTSE 350 firms only paint an incomplete picture and mask the true picture of little diversity progress. Well, joining us now is Fiona Haythorne, Chief Executive Officer at Women on Boards. Fiona, thank you so much for joining us on this very important topic. So what have you found, and how do you explain this little representation?
Well, firstly, we found that only half are meeting the 33% target of women on boards. And more worrying, 54%, that's more than half, have all male executive teams or all male leaders at the top. And we find that completely unacceptable. And you will remember that the Hampton-Alexander, our government, has had a lens on the FTSE 350 and argues that it's almost job done. We've made a lot of progress, and we have. But at the FTSE 350 level, only 6% are all male leadership teams. So compare that with the FTSE All-Share, those smaller companies outside the FTSE 350, and there's a lot of work still needed to be done. We also looked at the gender pay gap reporting for the first time ever for all of those companies, and that was a bit of a shocker too.
So, Fiona, does the pandemic actually, has it made things worse?
Well, the pandemic has clearly been very difficult for women in general because of the caring responsibilities that society seems to put on their shoulders. But I think longer term, the pandemic has showed us that flexible working does work for all, men as well as women. I think what we've got to be very careful as companies move forward in this new hybrid world in the way we're working is that women in particular do still go back to the office from time to time and do actively manage their careers. I don't mean being present present all the time, but being very, very clear what you contribute, because those networks and relationships matter. So I think we've got to be very careful going forward. And what we do know, looking at the FTSE All Share, is the gender pay gap is around 20% for all of those 600 companies against the average of around 14%. But worse, the bonus gap is 40% against the average of 20%. So what we really need is the government to still put a lens on all of those companies, because what gets measured gets managed, and what gets managed gets done. And I will talk to you shortly about leadership training and treating it like a change program. Yeah. Stop fixing the minority.
But Fiona, does it have to go through compensation, incentives, quotas, or what is the right approach?
Well, I mean, we've had a comply and explain approach, and we've put a target of 33%. But that's fine. But targets only work if you measure, manage and monitor. And what this research has shown is outside the FTSE 350, nobody's measuring, nobody's monitoring. And I think we need to keep that lens on. Now, as we can see in France and Germany at the moment, they're looking at quotas for the executive teams to come in. I hope we don't need to do that. I'm sure we don't need to do that, but we do need the government to continue putting a lens, not just on the FTSE 350, but all of these companies, because somebody's got to measure and monitor, otherwise nothing happens. 54% of those companies outside the FTSE 350 that haven't been measured, haven't been monitored, still have all male executive teams. So a lot needs to be done in terms of leadership and conscious inclusion. I don't mean unconscious bias training, in how we make sure that our economy remains strong and innovative, and uses all the talent in the UK. And we know from all the research from McKinsey and everyone else that diverse teams perform better, but only if you can manage them effectively.
So, Fiona, where exactly is the sticking point? Is it at recruitment level? Is it that you don't find, you know, the kind of the right people in the C-suite to then be promoted?
I think, you know, it's systemic within our society. Our society has a view of what women can and can't do, and that needs to be tackled. And that's throughout our education system. And we know from between the ages of 4 and 6, young girls in particular have a different perception of what they can and can't do. And that's still the case today. So we can't blame the companies for everything. But what we can ask companies to do is to set targets so they actively manage what's happening in departments and divisions, to make sure that if you recruit the best graduates, then they have an equal chance of being promoted, and you can measure and monitor that. So that's where a lot of the progress has to be done. You need to understand what's our intake, how are we keeping them, and what the issues are, and the issues that individuals face, whether it's somebody who's disabled, whether it's somebody who's black or an ethnic minority. And that's the other thing that we also looked at in the, I must mention this, in the FTSE All Share outside the top 350, we found that only 3% of board directors were directors of colour, and Fiona, only 16% have met the Parker review target. Not good enough.
Fiona, thank you so much. Fiona Hathorn, absolutely not good enough, chief executive there of Women on Boards. Now, London turns its Olympic Stadium into a pop-up vaccination centre. Britain's government pushes for its entire adult population to be vaccinated, but cases of the Delta variant are still surging. How concerned should other countries be about the UK's spike in infections? We'll discuss that with Sam Fazeli up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the Biden administration has rejected a call from Nicolás Maduro for relief from U.S. sanctions. Responding to Maduro's comments to Bloomberg TV, a State Department spokesman said the Venezuelan leader needs to do more towards restoring democracy and engage with the opposition. The U.S. doesn't accept Maduro as Venezuela's legitimate president and instead recognizes Juan Guaido, the leader of the National Assembly, as the interim president. While Maduro said the sanctions are cruel and immoral, he spoke exclusively to Bloomberg's Eric Schatzker.
I believe that the sanctions are immoral. That's the first thing. They are cruel, very cruel for a country. And I think that at a round table of conversation, even if it's private, the United States of America, the Biden administration, should accept it as such, should see it as such. And the sanctions are transformed. As the Human Rights Organization says, the special reporter that came to Venezuela for the matter of the sanctions are transformed into a great violation of the human rights of the Venezuelan men and women. Furthermore, not only is it a cruel mechanism that causes suffering to the people, but it's also a failed mechanism. Failed. Because all the sanctions, in an extremist and irrational manner, were applied by the Trump government against Venezuela for a change of regime. And they didn't achieve it. Nor are they going to achieve it. So the sanctions should be recognized as illegal, irrational, extremist, cruel, and they should be lifted.
En su opinión, señor presidente, pero todavía es la política.
In your opinion, Mr. President, but it's still U.S. policy. And it seems to me the U.S. won't change its policy without a change in positions.
Entonces es un juego cerrado, Eric.
Then it's a closed game, Eric, because we have our principles, our Constitution. We have the right to life, to economic freedom, to commercial freedom. Venezuela and the whole world has the right to commercial freedom. There can't be one country that, because of the control of the currency and of the banking system, imposes to the rest of the countries of the world what should happen in their country at a political level, who should govern or who shouldn't govern. If that was established, Eric, it would simply be the end of the United Nations system, the end of the international law.
Venezuelan President Nicolás Maduro there speaking to Bloomberg's Eric Schatzker. Eric also spoke with Maduro's opposition, Juan Guaido, who is recognized as the interim president of Venezuela after an election that the U.S. and many others said was rigged. Guaido said the pressure of sanctions has increased the possibility of a deal with Maduro.
Maduro siempre quiere negociar. As I said in the beginning, Maduro always wants to negotiate for the same reason. To ease the pressure, earn time, and try to confuse the democratic alternative. You talk about different groups. Today, the advantage is that together we have set the possibility of an agreement that will be negotiated, facilitated dialogue, the support of the international community.
So we'll have plenty more, of course, on Venezuela throughout the day. Now, a major push to offer COVID-19 jabs to every adult in England is underway, with queues forming outside pop-up vaccination centres, including at West Ham's London Stadium, where the 2012 Olympic Games took place. But the Delta variant of the virus has made infections spike in the UK once more, and this has prevented the government going ahead with its planned relaxation of overseas travel restrictions. Well, joining us now is Sam Fazeli. He's the Director of Research at Bloomberg Intelligence. Sam, first of all, there's quite a lot going on in the UK. It's one of the most vaccinated countries in the world, and yet there are 10,000 or more cases a day. What exactly do you see in the UK that could have done better, or does it just show the limits of vaccinations?
Francine, no, I think the UK has done a pretty good job. We still have to wonder whether that one-dose strategy for 10 days was absolutely the right way to go, but it certainly helped bring down the mortality rate. But I can tell you that when you look at my favorite data source, which is the Zoe COVID-19 symptom study, you've got about a six-fold increase in the positivity rate of people who've not been vaccinated in the past 4 weeks, compared to just a twofold increase in those who are fully vaccinated. So, and the difference between them is like tenfold. You have a very small 0.25% positivity rate in fully vaccinated people versus 2% positivity rate. Clearly, the vaccines are working. And therefore, what we saw yesterday with a massive push is absolutely the right thing to do.
Sam, so we see quite a lot of travel companies actually trying to put a lot of pressure on the government here to ease restrictions. What do we know about that? Do you write off summer holidays for the Brits abroad?
Well, not if you're very happy to go to Cornwall and Devon and the Lake District and Scotland and Wales. But in terms of international travel, it's complicated by several issues. The UK can do what it wants. But if you've got countries like Italy that then introduce a 5-day quarantine, I'm not sure anybody would want to go there. And I would not be surprised if other countries, given that they're bringing their cases down so well, Germany and France particularly, would welcome people from an area where there is a rampant infection with the Delta variant with open arms. What happens with double vaccinated, fully vaccinated people is an interesting question. I'd love to hear the answer to that from the government.
Sam, thank you so much. Sam Fazeli there, Director of Research at Bloomberg Intelligence. Now, coming up, cryptos sink as China cracks down on Bitcoin miners. Up next, we'll drill down on this morning's market action. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, cryptocurrencies are taking another hit as China cracks down on Bitcoin miners. For the latest on what's moving the markets today, we're joined by Bloomberg MLive's Eddie van der Velde. Eddie and I also, off the record, are talking about him possibly getting a puppy, but away from puppies, actually, boom market. Eddie, what are you looking at? It's the reflation trade not quite working out anymore.
Yeah, it's very difficult for cryptocurrencies at the moment. The China narrative is part of the story. And, the relationship between Bitcoin and the miners are a complex one. If you see fewer miners, that doesn't mean that you see fewer Bitcoin being created. It just means that the difficulty of creating new coins comes down. So it's really complex. It's not like looking at a traditional mining model from that perspective. Mm-hmm. But at the same time, I think what we're seeing here is we're just seeing the pressure from regulation and from policymakers in general on cryptocurrencies just starting to bear out. Now, in the long term, I think greater regulations are positive for cryptocurrencies because we need to get them into the broader financial fold to get mass adoption. But for the time being, if you see China putting pressure and you see Basel putting pressure, then you're going to see crypto prices going lower.
Yeah, so what exactly is the hash rate?
So the hash rate is the difficulty or the amount of the amount of computing power that is dedicated to creating new Bitcoin. But if you will remember that Satoshi Nakamoto in the original white paper said there will only ever be 21 million Bitcoin, and the rate of production remains pretty much stable. So as you put more computers on solving these problems, what happens is the problem becomes more difficult or easier. So the rate of production of cryptocurrencies, of Bitcoin in particular, stays relatively stable as the amount of miners change.
Eddie, thank you so much. Bloomberg MLive's Eddie van der Velde there. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Kailey Leinz out of New York. We'll have a full roundup, of course, of the markets. We'll talk Iran. We'll talk cryptocurrency some more. We have you covered. This is Bloomberg.
The bond market has its own brain. It's a very shrewd operator.
Overheating has been a major concern of mine. I'm glad to see that they have that recognition.
Are we at peak growth right now? Yes, probably.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, June the 21st. Our top stories today. Investors sour on the reflation trade as the 30-year Treasury yield falls below 2%. How much flatter will the curve get? Nuclear talks hit a roadblock as Iran elects a new hardline president. Tehran wants a guarantee that the U.S. won't quit the accord again. And crypto crackdown, Bitcoin sliding amid a risk-off mood in markets and a clampdown in China. So definitely quite a lot going on in the markets. Kailey, we heard from James Bullard. I think he's speaking today again with Robert Kaplan, and that will give us an indication of what markets do next.
Yeah, markets really paying attention to the Fed, Francine, and any indication that maybe they're not going to let inflation and the economy run quite as hot as we maybe previously thought. Just a recap of what we saw in the Asian session overnight, it was broadly negative. Most of the major benchmarks lower, including the Hang Seng, which was down about 1%. And your real underperformance came from the Nikkei in Japan, which fell 3.3%. Japanese equities, of course, quite cyclical. They may have been weighed down on quite a bit by the fact that we saw that reflation unwind happening here in the U.S. on Friday, and that followed through in the Asian session. Also, I would note in foreign exchange that Japanese yen is stronger against the dollar by about 0.25%. And then Bitcoin makes it on my Asia board today because, of course, the fear around the crackdown on mining in China is really weighing on the cryptocurrency. That hash rate is moving lower, and as a result, Bitcoin also moving lower. Right now, it's just shy of the $33,000 level. As for what the picture looks like here in the U.S., the older the future session grows, the more positive it becomes. Right now, S&P 500 futures up about 15 points. It is NASDAQ 100 futures, though, that are outperforming, so it does look like big tech may still be leading on the day. In the bond market, the 30-year Treasury yield fell below 2% earlier in the session. We are right now essentially unchanged at 2.02% or so. And actually, after 3 days of flattening, the curve is steepening back just a touch. The 530 spread now sitting right around 115 basis points, and keeping an eye on oil as well. That Iran nuclear deal still out of reach after the 6th round of talks in Vienna. Right now, WTI is trading just below $72 a barrel, Matt.
All right, we will be watching, Kailey, oil very closely. Obviously, the situation in Iran is prompting many to question whether we go from a supply, too much supply, to a supply shortage. And this is going to definitely put an exclamation point after that question mark. Let's take a look at what's going on here in Europe. It is hot. Maybe that's a reason that you see red on the screen in a few places. Spain right now, France and the UK, little changed. It's a good day to work at home if you have AC, or come to the office if your office has AC, which is a huge if in Europe. I also want to point out that the DAX is a big gainer. We have almost 2 winners for every loser here in Germany, so it's doing much better than the rest of the continent. The euro getting a little bit of a bounce, but it had come down substantially. So the ECB is doing its job well versus the Fed, but right now we see a little bit of a bounce in the currency, a little bit of a bounce in the pound as well as the dollar comes down. And then, you know, last week, Francine, someone on Twitter, a viewer on Twitter, was very angry, had enough of me making fun of the British and their obsession with supermarkets. Now, I pointed out, I do it in jest. I love the British. I lived in Britain and enjoyed my years there, and I love those supermarkets as well. William Morrison is up 32%. It could get taken over, but it's not the only supermarket gainer. You see big gains in Sainsbury's, Tesco's, and Waitrose as well. So watch, I forgot to mention Marks and Spencer's. Watch those British supermarkets today.
Yeah, I don't see you shopping at M&S. Maybe Morrison's. I think you're more of a Savile Row kind of shopper, Matt. Correct me if I'm wrong. But
As I have previously mentioned, M&S is a good place to buy underwear. If you're just looking for your typical tighty-whities, your Y-fronts as you call them, M&S is a good place to get those.
The Mid of a Fashion with Matt Miller. This should be like a regular segment at 5 a.m. just so that if you're coming to the UK, if the rules change on how you travel, you know where to get your bits and pieces. Now, this is a look at what else is ahead this week. Of course, the Qatar Economic Forum kicks off today. That's at 8 p.m. Eastern Time. The first day speakers include Ray Dalio, Larry Summers, and the South African President, Cyril Ramaphosa. Tomorrow, New York City goes to the polls for the hotly contested mayoral election. We'll have special coverage across Bloomberg throughout the day. Also tomorrow, U.S. Secretary of State Anthony Blinken kicks off a trip to Europe. He'll start in Berlin by meeting Chancellor Angela Merkel. And then on Thursday, it's the key central bank event of the week. Of course, the Bank of England announces their latest policy decision. We look at the Bank of England on how they also see a possible fourth wave of COVID-19. In other news, another round of Iran nuclear talks have ended without agreement. This comes one day after hardline cleric Ibrahim Raisi was declared the winner of Iran's presidential election. Well, joining us now is Golnar Montevalli, Bloomberg's Iran reporter. Golnar, so what does this mean for the nuclear accord? And first of all, does the U.S. need to get rid of the sanctions against the president-elect for anything to happen?
Hi, Francine. Yeah, so with Ibrahim Raisi becoming president-elect, obviously there's a big question mark now over whether that's going to have any effect on the talks that are happening in Vienna over reviving the deal. The signs and the signals we have from Tehran so far are that he wants to preserve the accord. He said that during his election campaign, and there is a definite sense that the nuclear deal and foreign policy is being ring-fenced for now because Supreme Leader Ayatollah Ali Khamenei, who ultimately makes those decisions, has so far backed the talks to revive the deal, and there's no sense that there's going to be any major spanner in the works. But there's obviously a big question mark over these sanctions that you just mentioned. Raisi was directly sanctioned by the Trump administration in 2019. He's designated under those OFAC sanctions designations, and whether those are going to be lifted now, that question mark is going to be revived. I think there was a sense before his election that they were definitely going to be lifted by the Americans as part of that agreement to revive the deal. And now we're seeing kind of louder noises around his background, particularly on human rights. And that may raise some kind of flag and some question mark over whether the Americans will be willing to lift those sanctions.
What does this mean for oil exports? I know they've been able to get some out to China and some other countries, but how many barrels a day are they exporting, and how many barrels a day could they be exporting were we to make a deal?
Well, they obviously want to get back to pre-sanctions export levels. So we're looking about 2 million barrels a day. It's going to take time, obviously, for that to happen. They are pumping oil. They're still producing quite a significant amount of oil, again, though not in the levels that they were before sanctions. So that's another obvious big question mark. Because we don't know when this deal is going to be revived yet. Everyone is looking at kind of two different deadlines now. We're looking at June 24th, when this technical agreement that Iran has with the IAEA, the UN nuclear inspectors, expires. And then we have mid-August, which is when Hassan Rouhani, the moderate president who championed the nuclear deal, leaves office and Raisi takes over. But if we do get a deal before mid-August, if the deal is revived again, then Iran expects to be able to get back up to pre-sanctions levels of oil output within 3 months. So we're looking at an aim, I think, probably towards the end of the year, at the end of the last quarter, of 2 million barrels a day, if the nuclear deal is indeed revived.
Right, a big if there. Bloomberg's Golnar Montevalli, thank you so much. Turning back to the markets now, and investors are shrugging off last week's bearishness after the Fed's surprise hawkish turn, with U.S. futures climbing and longer end Treasury yields turning higher. Here's Bloomberg's Danny Berger for more. And Danny, the curve steepening once again.
Yeah, it really is. Finally, a little bit of calm in the market. How long will it last? That's certainly a big question on everyone's mind. But coming into this week, this is the picture we had faced. We had seen the most severe flattening of the curve since 2011 last week. And as the Asia session unfolded, when I came in here at 3:30 a.m. London time, it's definitely within the meat of the day of the Asian trading session. Let me show you how the U.S. 30-year yield looked, because we continued to see investors flocking into it. You have this big dip, but as the European session opened up, as we moved away from that Asia heavy session, you did get some of this yield coming back up, and indeed yields moving higher now. And across the board, that's really what we're seeing. Some of the risk aversion taking its foot off the gas pedal. So if I can show you what a couple of different assets are doing, we are definitely still seeing some buying, for example, in the 10-year yield, but you are seeing stocks that are more cyclical in nature underperform. That doesn't mean that they're necessarily totally negative, but it still is a little bit of that flavor where things like the Stock 600 here in Europe are underperforming something like the NASDAQ 100. So still you get this sense that the reflationary trade is still not in vogue. However, we're not seeing as severe of a sell-off in a lot of these type of assets as we did at the end of last week.
All right, Danny, thanks very much. Danny Berger talking to us about the reflation, deflation. We'll check in just a moment with an investor whether or not that is going to pause now. Over in Hong Kong, though, Bloomberg has learned that Jimmy Lai's Apple Daily will suspend operations if its Hong Kong accounts stay frozen. It doesn't have access to that money, and therefore it can't afford to continue operations. Bloomberg's Ian Marlowe joins us from Hong Kong to talk about this continued crackdown on democracy. And I guess, Ian, this is what this is, right? Because we're talking about a pro-democracy media organization.
Yeah, Apple Daily, the sort of the most popular pro-democracy opposition newspaper in the city, has been under mounting political pressure for months now. I mean, they've been raided by police before. Their owner, Jimmy Lai, is currently in jail on charges for attending an unauthorized protest. And late last week, 500 police officers marched into the headquarters of the Apple Daily newspaper, and 3 of their top editors and their chief executive and publisher were arrested under the national security law, which China obviously imposed on the city last year. So at the moment, there's a lot of questions because this is the first time authorities here have used the national security law to arrest journalists. They previously said this law was only for a small minority of criminals. They'd be going after people who had violated the law. They were saying it was about riots and maintaining peace and stability in Hong Kong. And now we have essentially one of the largest opposition newspapers in the city being shut down because its owners can't access more than 500 million Hong Kong, roughly about nearly 70 million US, in funds that they have in the bank. So at the moment, they don't know how to pay staff. Suppliers and others can't transact with them. They can't put any money in their accounts. So at the moment, they're kind of being forced by the government into effective bankruptcy here.
All right, it's a story we will continue to watch. Thank you so much to Bloomberg's Ian Marlowe in Hong Kong. I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S., beginning with some M&A action on this Monday. Raven Industries, which is an industrial agriculture products maker, is higher by 47% or so in early hours after CNH Industrial agreed to buy the company for $58 a share, around a 50% premium to Friday's closing price. Another stock surging in early hours is Torchlight Energy. This is one of the meme stocks that is front and center now. It once again was touted on Wall Street Bets as a potential short squeeze, and as a result, traders bidding up those shares, they're higher by about 42%. As I was mentioning, though, Bitcoin is under some pressure today because of fears around a mining crackdown in China, and as a result, some cryptocurrency-tied stocks are also under pressure in early hours. MicroStrategy, one of them, lower by about 6% before the bell, Francine.
Yes, so much going on that actually warrants a little bit of our attention. Now, coming up next, we'll look, of course, at the reflation trade. We'll get yields with Patrick Armstrong, Plurimi Wealth Chief Investment Officer. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, joining us to talk about the souring of the reflation trade is Patrick Armstrong. He's Chief Investment Officer at Plurimi. And Patrick, when you look at some of the metrics, it's very clear that the Fed pivot means that the markets are a little bit unsure about how to price things in. When will investors actually get a better handle on the fundamentals and what the economy does?
Yeah, I don't think they're trading off the economy so much. It's trading off that the Fed in 2 years is going to hike rates a couple of times. Half of them expect, and the other half aren't really pricing that in yet. So I think the market's really gone from reflation, the Fed's going to look through everything as transitory, to essentially being asleep at the wheel for the next 3 years, to where they've woken up where a lot of the Fed is going to pay attention and maybe the inflation isn't necessarily transitory. I don't know if the market reaction makes sense to me. I suspect the Fed would not have anticipated this, and therefore a significant chance they sort of changed the narrative this week, where they really, Powell may want to say, he always says don't look at the dots, but I think he may stress don't look at the dots, listen to what we say. Bullard came out a little bit more hawkishly on Friday and even said about a 2022 hike. And I think all of the Fed docs make sense, but totally inconsistent with really what the Fed has been trying to achieve over the last 9 months, which is create reflation.
Yeah, I mean, but also pretty insignificant, right, Patrick? I mean, half a basis point by the end of 2023, that's a long time away in this kind of economy. So can't we really take it with a huge grain of salt?
I think we should be taking it with a huge grain of salt, and every reflation trade basically just got thrown out the window on Thursday and Friday this last week. And I think it's a relatively easy story for the Fed to take back, exactly just putting it as you did, that these dots are 2 years down the line. We have to hold our hands up because we have no idea what we'll be doing in 2023 because there's so many things that'll happen between now and then. But the Fed just really wanted to ease the signal that eventually all this free money, zero interest rates, buying billions of bonds will end at some time. And I thought that was probably a pretty mild way to show that things may eventually change. But the market is throwing out all reflation trades on this.
But it probably won't end soon, right? Because now it looks like central banks, the big ones, are starting to try and position themselves. The ECB says their stimulus is going to last at least as long as the Fed, which has helped them get the euro down to 118. I'm wondering if the reflation trade still has room to run. I got this great chart from our MLive blog. Cormac McMullen put it together. And for our listeners on radio, I'll walk you through what it shows us. This reflation trade, which started off in November, and here is shown as the MSC All-World Value Index divided by the All-World Index. It took off and rose to 18%. Now we're back down to about 9%. So it's about halfway what we have, halfway back down what we have climbed since November. Is this a good point for it to, I mean, is the deflation of the reflation trade kind of on pause for now?
It's on pause. And it's going to come down to the Fed. They're going to establish what they want their narrative to be this week. I expect they're going to come out quite dovishly, and you're going to get some of those reflation trades put back on. If the Fed comes out and all parrot what Bullard said on Friday, we probably have further downside because I've been owning banks. I own Goldman Sachs, I own Citigroup, and it's part of the reason I own them is I expected a steeper yield curve and that it would improve their profitability. I expected commodities to continue to get bids because the Fed would let inflation run hot. And I still think that's their game plan. I don't think the whole world gets out of this without basically massive monetization of debt, very strong nominal growth. I don't see how we get away from that with the debts and the deficits we face. So I expect that to be a pivot in the narrative this week. But if that doesn't happen, Thursday, Friday are probably what we've got for the next few weeks.
All right, thank you so much, Patrick Armstrong, CIO at Plurimi. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Happy Father's Day, Matt Miller. Belated Father's Day. Now let's get straight to the Bloomberg First Word News. And the two main contenders for next year's French presidential race both fared worse than expected in the first round of the country's regional election. Now, Marine Le Pen's national rally got 19%, almost 10 points behind her score in the last election. President Macron's party taking 11%. The turnout, an estimated 32%, was really at an all-time low. One recent survey showed many citizens didn't even know what the election was for. Now, some of Japan's biggest private employers will offer on-site vaccinations for staff from today in an effort to boost the country's slow vaccine rollout. Elsewhere, Russia, Germany and Portugal reported more cases of the Delta variant. Canada, meanwhile, said its border with the U.S. probably won't reopen until 75% of its population is vaccinated. And a blank check firm backed by billionaire Bill Ackman is buying 10% of Universal Music from Vivendi for about $4 billion. Ackman's SPAC, Pershing Square Tontine Holdings, says the transaction values the home of Taylor Swift and Billie Eilish at $42 billion, including debt. And some breaking news, China's asking banks and Alipay not to get involved in crypto operations. Matt, this is a story that we've been following closely, not because of this, because this just broke, but actually over the weekend, there were a couple of regulations in order to keep control also of mining because it's not considered green enough by China.
Wow. So China doesn't, if China doesn't think it's green enough, then it's not green enough for anybody. I thought it was also interesting that we see at the same time a number of unicorns in China, in Hong Kong, that are getting big, billion-dollar valuations, and they're crypto exchanges or fintech that involves crypto. So it does look like you've got up and down arrows there.
And a down arrow for Bitcoin now.
Yeah, it certainly is.
For sure.
We'll have plenty more on Bitcoin. Coming up next, the Lloyd's of London chairman. This is Bloomberg. Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there is quite a lot going on, Matt, in the markets, and of course, it's a reflation trade that's not exactly going to plan, but it was interesting to get Patrick's thoughts on the fact that they've moved quite quickly, the markets, and he actually thinks they're probably moving too quickly. So I don't know whether they were mispriced before or whether they're mispricing how aggressively the Fed will move today.
Yeah, I think it's really interesting. We have a couple of Fed speakers also to watch out for, so there still could be some catalysts this week, but the gains that we've seen in this reflation trade have already been cut in half, as I showed you earlier. So maybe it's time for a breather and for the market to refocus. On the other hand, there's so many other things to watch, right? I mean, oil especially is important as we try and make a deal with Iran. The crypto situation is fascinating as China clamps down further, but a lot of the innovation is coming from China as well. So, and then you've still got the COVID issue, right? The Delta variant that has hit the UK so hard is now starting to rear its ugly head in the US as well. There are a lot of moving parts to kick off this week.
Yeah, a lot. So, Kailey, how's it all playing out in the markets?
A lot to digest for a Monday morning. Matt Miller coming at us hard this morning. Although I would say in the equity market, actually, the older the session grows, the more positive it becomes. So all of those fears or worries the market could have that Matt was mentioning about, they don't actually seem to have them right now. The stock 600 in Europe was lower by as much as 0.6% and now is in positive territory to the tune of about 0.3%. And here in the U.S., futures are continuing to climb as well. NASDAQ 100 futures right now up by about 0.6% or about 85 points. And in the bond market, the U.S. 30-year yield actually fell below 2% earlier on in the session. Now it is climbing once again, and actually as a result we are seeing the curve steepen just a touch. Right now the spread between 5s and 30s sitting right around 115 basis points. And then of course, as Matt was talking about, that crypto crackdown in China, both when it comes to mining and then of course the headline just crossing that China is asking banks and Alipay not to get involved in the crypto space. That is weighing on sentiment, with Bitcoin now just around $33,000. That is the lowest level since January. And of course, with Bitcoin moving lower, it is dragging on some crypto-tied stocks in pre-market trading. You have Marathon Digital, MicroStrategy, Riot Blockchain, all down 6% or more. And then Coinbase, of course, is a crypto exchange, and it is also down by about 2%, Francine.
Kailey, thank you so much. Now, the insurance market has been at the epicenter, of course, of the coronavirus crisis, paying out billions of dollars to bail out everything from cancelled sports events to giant concert tours. Now, Lloyd's of London, the world's largest insurance market, has secured an additional £650 million of cover for its central fund. That's to protect against its underwriters being overwhelmed by similarly unexpected events. We're delighted to be joined by Bruce Carnegie-Brown, chairman at Lloyd's of London. Mr. Carnegie-Brown, thank you so much for joining us. When you look at how the pandemic has affected Lloyd's of London, but also the insurance market in general, what will its legacy be?
Well, as you rightly say, this has been a very large event for the insurance industry, and at Lloyd's, we've announced that we will pay claims in excess of £6 billion related to the pandemic, and the largest of those have been around event cancellation issues. Increasingly, of course, what we're focused on is how can we support our customers in future pandemics, but also more broadly across other systemic risks like cyber and climate. And so one of the big themes that we have post this pandemic is working more closely with governments to provide solutions to these kinds of challenges. So interestingly, statistically, I think the total resources of the non-life insurance sector globally are about $2 trillion to pay all of their claims. But what the IMF said in 2020, the government's pumped in some $14 trillion to support their economies. And so you can see that the scale of the challenge around the pandemic has been much too large for the insurance industry alone to bear. And so I think creating a collaboration between the industry and government is going to be key to addressing future systemic risks.
So can you give us an indication of what you think the final bill for COVID is? Is it too soon to actually see how much this will cost Lloyd's of London and some of the underwriters?
No, so we think our total bill will be of the order of £6 billion now. The key now is, of course, that many of these covers are not available to our customers going forward, and we need to reintroduce them in order to support our customers in building back resilience into their business models as they try to reopen for business.
Are more people asking for insurance against future pandemics? Is that something that you can ensure?
Yes, well, in fact, the answer is that we did provide insurance cover. So after the SARS epidemic, we produced a report in 2008 that's been on our website since then, which looks enormously prescient for the issues that the economies around the world have subsequently faced through this pandemic. And we put in place products to try to support our customers. But nobody bought them. So one of the challenges around this is not just having the products available, it's behavioral activity on the part of our customers. And what we find is that where events are very remote in terms of their perception, even if the impact is very high, people don't buy the insurance covers. Now, clearly, pandemic is now no longer regarded as a remote event, so people are interested in buying pandemic covers, but it's not just an issue of whether they're available. They also need to be affordable for our customers. And because of the size and scale of this kind of issue, this is why we need a partnership with government. And so we put out a white paper last summer on suggested structures that we could work with, and we've been engaged with more than 25 governments around the world to look at a partnership that would help customers be able to buy this product at an affordable price to protect themselves from future claims.
What kind of pricing do you expect? Because, of course, it's still remote, right, Bruce, that we have another global pandemic that forces businesses to shut completely down. On the other hand, it's got to be incredibly, impossibly expensive to pay off if everybody takes it.
Yeah, so that's exactly what we need to look at, is that balance between availability and affordability. And we're running some test pilots at the moment around certain products with customers to see whether what we're offering is interesting to them. I mean, clearly we all have a limited budget around what we can spend to buy protection from the risks that we take. And so there is a prioritization issue here. And do we need to divert a premium that we pay for risks that we currently insure to buying pandemic cover, for instance, if we think that those kinds of risks are now looming much larger on the radar screen. So there's a huge behavioral issue here. I mean, if you take an example away from the pandemic and you look at windstorms in the United States, hurricanes blow pretty regularly every year in the southeast of the United States. But only 1/3 of the economic value that hurricanes destroy is actually insured even today, despite the regularity of these events. And what we know is that the most expensive real estate in the world is all located on waterfronts, and waterfronts are most exposed to hurricanes. So there's behavioral issues that also need to change here to build resilience into our economic models.
Well, Bruce, that brings me to climate change. To what degree are you seeing demand for insurance against climate events move higher?
So we think the total premium value for climate-related events is increasing year over year. We're doing a lot of that at Lloyd's today. But again, it's important that there's resilience alongside climate change. So our mantra really is trying to support our customers as they transition to more sustainable business models. We're absolutely committed to the UN sustainability goals for a net zero by 2050. And we've announced that from the beginning of next year, we will not insure new thermal coal projects, Arctic drilling or oil sands projects, because we think those have the highest negative impact on the world's climate. And similarly, we're producing products to support renewable energy, particularly things like wind and solar.
Aside from climate and the threat of another pandemic coming potentially down the line, what other kinds of risks are people primarily looking to insure against?
So cyber is I think the third of the systemic risks that I call out. So pandemic, cyber, and climate, and cyber risks are also growing as a result of the pandemic. Much greater adoption, of course, of cyber ways of working through the pandemic, and therefore a need to adopt and adapt policies. So a good example of that would be typically you're not allowed to use your home under your standard home insurance policy as a place of work, and the insurance industry has moved to adapt its policies to allow for remote working. But there is an increasing evidence of ransomware, for instance, that's coming through in the last 12 months that's causing very substantial claims in the insurance marketplace against the provision that we have. And it's also important, just as you know, if you have a sprinkler system in a factory, it reduces the chance of fire. If you have a burglar alarm, it reduces the chance of theft. We've got to try to build a better engagement with our customers about reducing the incidence of the risks that they face. And of course, if the risk goes down, so will the costs of the cover.
Bruce, thanks so much. Bruce Carnegie-Brown, their chairman at Lloyd's of London, joining us today. Now, coming up, Bitcoin under pressure after a crackdown in China. We'll talk cryptos next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, China continues to crack down on cryptos, now asking banks and Alipay not to be involved in crypto operations. Bitcoin is, of course, struggling amid a risk-off mood in the market and the ongoing issue with mining in China as well. Joining us is Bloomberg's Eddie Vanderwalt to talk about this, as well as some other things if we have time. But let's focus on cryptos first. Eddie, there's been a drop in the hash rate. So what does that mean for the price of Bitcoin?
I know. Yeah, I know. It sounds like a really scary metric. All it really tells us is that, you know, miners are shutting down their computers and they're mining less Bitcoin. But what this actually means, it doesn't mean that we're going to see Bitcoin into the market, because the fundamentals of Bitcoin doesn't quite work the same as, you know, shutting down a copper mine. Therefore, you will get less copper production. The rate at which Bitcoin is produced is fixed by the algorithm. So therefore, you know, just shutting down miners just means it becomes easier to mine Bitcoin. It doesn't mean that we will see less Bitcoin coming to market. Really, what we're seeing, this drop in price, is really got to do a lot more just with the risk-off mood generally in markets. Now, the risk mood has improved a little bit over the last hour or so, but not in cryptocurrencies.
But Eddie, it was my understanding that China, apologies, I always lose my voice when talking about cryptocurrency, that China was never that into cryptocurrency, so they always, tried to stem the flow. Well, the fact that it's now moving the price, is it because they're aggressively trying to kind of stem speculation?
Yeah, look, the Chinese government has never been big on cryptocurrencies. The Chinese government has never been big lovers of cryptocurrency. The Chinese people, however, have adopted it, at a pace probably that outstripped everybody else. We have seen, the Chinese consumer and the Chinese investor going after cryptocurrencies. And a lot of the mining capacity has been located near these big hydro facilities in China. So what we are seeing, is that as the government cracks down on it, that definitely has a knock-on implication for price.
Eddie, to what extent are you paying attention to the technicals? Does the death cross really mean anything?
The technicals for me is the most important thing in cryptocurrencies, because it's really hard to price cryptocurrencies on the basis of fundamentals, on the basis of inflation expectations, on the basis of almost anything else. But because cryptocurrencies is almost a pure investment play. Therefore, technicals which try and measure investor sentiment in some sort of pure form removed from the fundamentals, I think it's a really interesting to look at. I don't know that the death cross is going to matter that much. What I will say is that this drawdown in crypto has been a lot smaller than we've seen in the past. We're only down about 50% from the all-time highs. Previous drawdowns, we've gone as much as 80%. So, as crazy as it may seem, even with this drawdown, it seems as though crypto seems to be maturing and seems to become a little bit more just stable and worthy of mainstream adoption.
Well, and you've got a great chart. I'll recommend to our both our television viewers and our radio listeners to check out the MLive blog, MLIV Go on the Bloomberg, to look at Eddie's chart there. You're also talking, Eddie, a little bit about gold here. And in fact, a number of MLive contributors have weighed in on gold. We saw a great rally in the precious metal and then a drop around the Fed move. What's the short to medium term future look like for gold?
Matt, yes, the air has just kind of gone out of that gold rally a little bit. I think what we're seeing here is that we're seeing hopes that the Fed is finally starting to talk about tapering. We're just seeing that sort of hawkish noises coming through. But really, what you want to be talking about for gold at the moment is the dollar. If we look back at 2013, 2014, in the previous tapering cycle, what we saw was the dollar turned first, gold turned immediately afterwards, and that became the major trade for gold going forward for a number of years, and I think that could be the case here.
Eddie, I know that there are two actually Fed presidents talking today. Are they going to try and temper some of these market moves, or is this what they wanted?
I think we haven't seen extreme moves. I don't think that they will come out all guns blazing saying, listen, you got it wrong. Because I think there was perhaps the understanding that Bullard came out on Friday, and just ramped up the market's expectations for a slightly more hawkish Fed. Now, I think there's going to be a lot of management this week. We're going to get, I think we've got 16 Fed speakers this week. It's a really busy week for Fed speakers. So, there will be some management, but I don't think they're going to completely row back and say, listen, you got it wrong, because the market's move just hasn't been that extreme yet.
Eddie, thanks so much. Eddie van der Walt there, of course, from our MLive team, looking at everything crypto, treasury, and the flattening yield curve. Now, coming up throughout the day, Bloomberg Live Qatar Economic Forum, rethinking the global economic landscape through the lens of the Middle East. Now, we have a really all-star lineup for you. Speakers include the WTO Director General, Barclays Chief Executive Jess Staley, and Bridgewater founder Ray Dalio. So we'll look at that, and coming up, we'll have plenty more on Iran. We understand that there's a press conference by the president-elect, President Raisi, holding a press conference in Tehran as we speak. Plenty more on that shortly. This is Bloomberg.
انجام گرفت. این حضور پیام‌های مختلفی داشت.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Our Tom Keene now joins us. He's co-anchor of Bloomberg Surveillance. And I know, Tom, you have some great guests and then some great charts for us as well.
Well, Tony, we're perfect today. We
Happy
booked Tony
Monday.
Cosenzi before Friday blew up. And to have the gentleman from PIMCO with us today is really perfect with what we're seeing in the bond market. Ben Emmons will join as well on how this all links into Fed policy. Really, really interesting. Francine, as many people have said, including George Saravelis, I've never seen markets like this. Where we are right now, Francine, after this natural disaster, the huge fiscal stimulus is absolutely original, and there's no other chart than the amount of cash sitting at the Fed. One of the indicators of this is ON, overnight repos, and the circles are just simply the different days recently where the amount of money sitting at the Fed ballooned up, and there it is out to a new high after the Fed festivities of a week ago.
Yeah, Tom,
Wow.
I mean, we're hearing a little bit later on, I think, from Robert Kaplan and James Bullard. I mean,
Well,
they'll have to, and it's a really great chart. How will they position it?
This is really an important question, and you're dead on about the Fed speak this week. They're going to have to re-rationalize the message of last week, and Francine, critically, they're going to have to reset, as Bullard already has attempted to do. I believe it was on Friday. But what you saw on Friday, and with the markets up today, I'll tell you, the bond market is litmus paper for the global system now. It's tangible, and people are going to hang on every word of those Fed experts.
Yeah, they certainly will. Tom Keene, thank you so much.
Sure.
Co-anchor of Bloomberg Surveillance starting shortly. I'm really looking forward to watching the program. Now, a look at what else we're watching today. Kailey, what's on your mind?
Well, it's Amazon Prime Day today, Francine. Actually today and tomorrow, of course, the annual online sales event. Last year, it got bumped back to October because of the pandemic, and it is happening this year as it traditionally does in June. Now, this could be a really big sales day for Amazon. Analysts over at Telsey Advisory said total sales could be as much as $12 billion over just the two-day event. That would be growth of about 16% compared to 2020. And our analysts here at Bloomberg Intelligence, Matt, say there will be a shift in what people are buying this year, a bigger push toward apparel and travel as the world reopens. But of course, people are still going to be looking to buy things for their home, buy electronics. I myself will probably be doing some online shopping after work, Matt.
I was looking yesterday for disposable baby bottle inserts. So my
That's very specific.
shopping habits are changing drastically in terms of
I'd love
what I buy on
to see
Amazon.
your algorithms.
I am, exactly. I've gone from, motorcycle clutch tools to baby bottle inserts. I am watching UK supermarkets. Now, I make fun a lot of how much Britons care about their supermarkets, but I'm only joking. I also care. You know, I have bought BLTs at Marks and Spencer's. I have bought, TV dinners at Tesco's. Every little helps. And I have bought, honestly, the best New York cheesecake in the entire world at Waitrose, but Morrison's is the one in play right now. Clayton Dubilier and Rice making an offer there reportedly for $5.5 billion, and this supermarket could be in play. It was a 32% gain right now, so a massive boost to the FTSE and the stocks and the stock 600, and it's definitely one to watch because there could be more consolidation in this exciting industry.
Yeah, it's a great story, Matt, and it's amazing that they just after 3 days said, actually, no, it's not the right price. Matt, I hope your algorithm for Amazon is better than mine, because I still get, baby news, and my youngest is like 7 years old. So good luck with that. I'm looking at cryptocurrency, and this is, without a doubt, for me, one of the top stories because of China's involvement in cryptocurrency. So just a couple of minutes ago, I think about 15 minutes ago, China has asked Alipay and banks not to get involved in crypto operations. And then the last, I would say, 7 days, I learned DeFi, and I've learned exactly what some of the other things. Hash rate is.
DeFi,
so
you mean?
Commentators, DeFi, I say it DeFi, the European style, of course, mispronouncing it. So DeFi, the so-called decentralized finance, is something that we've been talking about over the last week, and China getting a much stronger stance on this. It's basically the apps that let people lend, borrow, trade, and take out insurance directly from each other. And the other one, which I'll also mispronounce, is hash rate, the computational power used to mine Bitcoin and the like, and China's having a crackdown on that as well, Matt.
Yeah, I think we all understand hash a little bit better than DeFi. Sometimes we use Wi-Fi when we're talking about Bitcoin as well, no?
I also say Wi-Fi. We'll have plenty more, of course, on Bitcoin, on the markets, on the yield curves, on Bloomberg. This is Bloomberg.